Hi there. I trust you're enjoying the show so far. This will take 1 minute or less. Just wanted to jump in and share this with you. I have to. If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcasts, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. So, download the free Anchor app or go to anchor.fm to get started. That's download the free Anchor app or go to anchor.fm to get started. Go, 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 go. Hey there, I wanted to chime in and commit to providing you a real estate update. Really, I wanted to share my expertise, my thoughts, of course, because I'm being asked a lot. And so today's episode, and maybe we may continue this on for the next couple weeks as we start to dialogue how to pivot during this new economic climate. Welcome to Ready, Set, Real Estate. I'm your host, Lisa Puerto, also known as SuperAgent. I am an active California real estate broker. I'm a national public educator. I'm a professional agent trainer and a philanthropist, founder of Real Estate 100 Youth Foundation, where we teach, seek, and empower youth ages 11 and up with real estate literacy, terms, concepts, and careers to alternate pathway to success. Okay, I have been getting tons of questions. So one of the things that I wanted to share is I am super grateful that I am still being productive. I am in good health, and I trust that you are all taking precautionary steps during this time to maintain your well-being, and of course, thinking of ways of how you can be productive. If you have been tuning in on our bonus series for the past couple days and weeks, I've been sharing the bonus entrepreneur series where I am discussing various ways for entrepreneurs, mompreneurs, independent contractors, business owners, poppreneurs to pivot, how to stay relevant during this time of social distancing. Now, if you are not a Ready, Set, Real Estate Club member, then this may be new to you or new concepts to you. But for those of you who are connected with me and have attended my industry trainings, you know we've been doing trainings on social media. We've been doing trainings on how to create your own virtual studios right from your laptop. All that is still available. Okay, so I just wanted to plug that in there. Shameless plug. But today, in fact, I actually was inspired by a few questions I've been getting, and I'm finding myself repeat this. And so I wanted to just take one question at a time. And I'm going to use that to build on this series as we talk about how to pivot during this economic market. And I'm going to talk about this from an industry professional side, and then I'm going to discuss it from a prosumer side. And for those of you who are unfamiliar with the term prosumer, that means instead of being a consumer, you are the individual who is producing and consuming that which you produce. You know, here on my platform, I am here to inspire and support your co-creativity. You are all co-creators. You are absolutely incredible beings. You're extraordinary, and it is your time. This is your time. If you've been wondering, when is it going to happen? When are things going to change? When are they going to get better? This is that time. And it is time for us to discuss opportunity, and making sure that you're not passing over opportunity repeatedly, right? The acronym of that spells POUR. POUR is passing over opportunities repeatedly. We want to make sure that we are shifting from poverty mindset to wealth mindset. And here on Ready, Set, Real Estate, we talk about legacies, wealth creation, generational wealth. And while there are many diversified vehicles that you can use to achieve that, we do know for the most part, real estate is one of those ways. With that, I want to segue into this question that I got from one of my clients, and I've been getting this from those of you who are listening and have been tuning in on my Friday market updates, where I cross-collaborate with Evan Jefferson at ERGJ Enterprises, and we have been discussing stocks and real estate as part of a segment we've been calling The Wealth Game. And I've asked them to send that content to me so I can upload them for you. I have shared a mouthful, and I know it went over some people's heads, and some of you may need the small bites. So I think I'm going to use the next couple weeks here on the podcast, and we're going to bring back our real estate bite segment where I talk about different aspects of the market, the industry, and business. So let us begin. This question says, with everyone being locked down because of the safer at home rules, are new properties still becoming available? So if you are a buyer client, and this is also for you sellers who are thinking about listing your property on the market, and you may have decided to withdraw the listing, cancel the listing, or something more serious may have happened where you were working with an agent, an online brokerage company. Some of the big franchise companies have actually furloughed the agents that are salaried and are considered employees. Now, this is where at this time in the industry, we will start to see a separation of industry professionals, where what it means to run a full service brokerage. Like myself, I am independent and I run a full service brokerage. So I'm not being furloughed unless I fire myself. And that's why I opened up and saying I'm fortunate because I'm still productive. I still have clients. I'm still doing inspections, negotiating, and I'm 10 toes to the concrete where I can see firsthand what is happening. And I'm not discussing these things in terms of theories and opinions. These are firsthand experiences as an active professional here in California, and also a consultant for various individuals across the country. And feel free to connect with me for a consultation, or you may be interested in learning more about our Property Owners EDU program. Check that out at propertyownersedu.com and sign up. Tons of value there. And so this question, this is how I answered it. So I'm going to repeat it again because I just talked about something significant that's happening with industry professionals who are being furloughed. You may once upon a time working with an agent, and all of a sudden they have been furloughed by their real estate brokerage. And some of those, and you may know some of those, I just don't want to shout those franchise companies out on the platform, but one company furloughed 41% of their employees, their agents, and another company let go 15% of their staff. And there's been a lot of, cancellations and withdrawals of offers, even with the iBuyer market. I did a segment on that called iBuyer Beware, and I'm going to reiterate it here. I am not a proponent of iBuyers because depending on who the companies are and who they have, who they are, where they have been operating, they have been robbing equity. They have been robbing the equity out of properties and really saddling a huge liability onto an unbeknown buyer. So if you're working with an industry professional, an agent, and they are not walking you through permits and due diligence and letting you know heads up whether work has been done with permits, I would definitely think twice about moving forward. Again, because you may be overpaying for a property which does not have legal permits. Okay, so I just touched on iBuyer beware. I just touched on what's happening with industry professionals being furloughed, losing their positions. And of course, we also have seen a decrease in buyer interest, in addition to a decrease of qualified buyers. And what that means is, because people have been furloughed, they have lost their jobs, businesses have been closed, those who may have been actively looking in the market no longer are in a position to move forward on their offers. So if you are a buyer who still is in a position to purchase, and by the way, I am connected with a great true down payment grant program, and this is how I've been advising my buyer clients to utilize, save your reserves, and utilize the down payment grant for your down payment. That way you still have reserves, because we are in a volatile market. I did a segment talking about OPM versus over leveraging, and I'm going to talk about it again. I'm not going to cover it at this moment, but OPM is other people's money, which I would refer to anyone who's doing financing through a traditional loan or a bank or a private lender. You're using those government insured loans or government backed products like the FHA insured loans, the VA loans, some of the Freddie Mac products and the Fannie Mae products. If you're utilizing those loans to purchase property, anywhere from 1 to 4 units, then that's other people's money. I did a whole discussion about over leveraging and why we see people canceling and pulling out of contracts if they consider themselves dealers, meaning they are a fix and flip purchaser. Then they have to pivot their strategy, and I will talk about that on a different segment. Tonight, I want to address this question about whether properties will still become available given the safer at home rules. So this is how I answer this: that sellers who are needing to sell still list their properties for sale. So my business model has been and always will be people who need to sell or buy real estate. That means they are being impacted by life events. I say life events triggers a real estate need. Those life events come in the form of death, marriage, job loss, job relocation, divorce, new baby, retirement. Can you think of some others? So any life events, now this one, a health crisis, these are all triggering real estate needs. Which is why someone like myself, who runs a full brokerage service, I'm a consultant, I'm a trainer, I'm an educator. I am now in what they call high demand because of the level of expertise, because of me discussing market shifts in September of 2018. I wrote a book in 2019 called Ready, Set, Real Estate: How to Win When the Market Shifts. I'm not new to a discussion about shifting markets because I'm in real estate, and I've been in real estate for, I would say, since I was 19, so close to almost over two decades, almost there, not quite. And what I do know is that real estate is cyclical. So if you are working with someone, or if you are an industry professional and you think that you were going to continue riding the market high, then you are delusional, respectfully said, and maybe this would be the wrong business for you. So as we consider that there are sellers who will pull back and cancel, withdraw their listings for those circumstances in which I named prior to what's happening, do know that there are still people who need to sell and buy still. And what has also been added by the industry as precautionary steps for both parties, meaning the selling party and the buying party, is that there are new COVID addendums, advisories, and disclosures that are now made part of our real estate contracts and escrow or settlement transactions to assist all parties in moving forward with their transactions. And even if unforeseen events cause delays, each party can cancel and walk away. So I want to just reiterate that. The industry has taken cautionary steps. They are looking for ways to minimize risk and liabilities in which agents are considered essential services, and we are operating. And of course, that depends on your state. Kudos to those states that recognizes that real estate is in fact an essential service, because we have been at war over land since the beginning of time. Give me a break if you have government officials that cannot recognize that housing, development, construction, commercial, we are all a part of that. New money isn't created unless we are transacting with selling or buying real estate. And we know that's important because the feds had just dumped $250 billion in mortgage-backed securities to weather the storm of a tanking market. So, of course, I say that in a very firm position that if there are government officials that don't recognize the actions of the feds to weather the storm and assist the banks, lenders, and those in the industry to continue operating in this capitalistic country, then there's a huge disconnect. I will share this as of the recording of today's podcast or tonight's podcast. It's pretty late. As of today's recording, the feds have decided they're going to keep interest rates low for a very long time, which I think is an interesting position. And they're going to keep interest rates low for a very long time, and they are committed to do what it takes to help the economy. And when we say helping the economy, again, it brings me back to the fact that government officials and monetary policymakers seem to be fighting I'm not going to say uphill battle, but a downward spiral. If we know that economies go through cycles of expansion and contractions, and the United States has been on the largest expansion in the history of the United States. And I have been saying that a lot of what we've been seeing in real estate and in the markets has been a facade. It's been an illusion. It's been a band-aid. It's been a cover-up to the fact that we know the market is long overdue for a correction. So we still see money being infused by way of stimulus, bonds being bought to keep rates low. We are now looking at possibly a negative interest rate environment to which banks can borrow money from the feds at a negative rate, which will keep rates low for the consumer or the borrower who's borrowing money for car loans and credit lines and mortgage and equity lines and so forth and so on. So with that being said, let me get back to the original question. With everyone being locked down because of the safer at home rules, are new properties still becoming available? So that's going to be a yes. They are still going to become available, and they're going to come in waves, given the fact that moratoriums have been placed. The Federal Finance Housing Agency is also working with the Consumer Financial Protection Bureau, have just launched a program to assist homeowners who are facing foreclosures. So we know it's coming. We know programs are now being put into play, especially because we know that lenders have been asked to basically carry the costs, what we call reserves. Mortgage servicers have been asked to tap into their reserves to carry the costs for up to 11 million mortgages that would potentially go into default during this period. And so I will address it on another segment, and I think I'll just defer you to the website. But if you do have a situation you need consulting with, feel free to connect with me. Do know if you are facing foreclosure, you've been issued a notice of default, it is not legal for anyone to charge you to assist you to keep your home. Okay. So with that I say I can answer confidently that yes, as a matter of fact, I still see new listings hit the market. And they're going to continue to hit the market is because we, as industry professionals, have been given precautionary guidelines followed by this, listed by the CDC, listed by the industry. We have new addendums, advisories, and forms that we can say, here's the scenario. Yes, we can all move forward in doing business. If we run into some issues as a result of the COVID or the stay-at-home rules or anything that's tied to it, then seller and buyer can decide together voluntarily to cancel their transaction and maintain being whole without being dinged or hit with severe losses while they're attempting to transact in their real estate deals. So with that, I say, I trust you found this segment helpful. If you have any questions, feel free to book a time. You can definitely send me a message. Check out propertyownersedu.com. Again, become a member if you are an existing homeowner. We do have a plan there for new homeowners as well, where working with us, we credit you with a portion of our commission towards your closing costs. And yes, all my clients get back a rebate from me. And do know when you work with me and our team, you are supporting Real Estate 100 Youth Foundation, where we provide great programs for our youth to learn the importance of real estate terms and concepts. And they get to learn the significance of renting and buying and leasing businesses and utilizing SBA loan programs to own their own businesses and so much more. Again, we are still on track to have our Youth Ready Set Real Estate Boot Camp. We are scheduled to do that in 2020. Of course, depending when we are released from our quarantine conditions. If not, we will then move to doing a virtual boot camp. So stay tuned for that. Again, have a great evening, a great night. I'd love to hear your comment and feedback. And I've got a lot more questions that I can address throughout the show. And that's what I will be using this time for the next couple weeks, so that we can dialogue on how we should be pivoting during this time, both professionally and personally. Take care, you all. I appreciate you for tuning in, and I'll catch you next week on another information-packed episode of Ready, Set, Real Estate. Bye.